Good morning, guys. It's Joel here, Trading Group 101 again, and we're back again today, continuing our theme of doing some analysis for you guys at your request. So today we're going to be taking a look at Crown Castle, a stock that one of our followers has asked us to take a look at and just provide a second opinion, if you like, another piece of analysis to see whether or not we think there's going to be a buying bias or a selling bias, or just generally map out some of the key levels to watch for this stock. So let's get into it. First of all, as a little bit of a background information for anybody that isn't aware of Crown Castle and what they do. It's not the most well-known stock, but they are invested into, well, their business dealings are in infrastructure, wireless infrastructure, fiber optics, that type of thing. Their customer base is typically governments and states within the US implementing this additional wireless infrastructure, but also dealing direct with businesses as well, getting them connected to fiber optics and to wireless infrastructure as well. So that extends also into some wireless cell phone towers, that type of thing as well. So that's their domain. For a little bit of context of exactly what this stock does. But let's look into now some of the analysis for this stock. So we'll go through our usual process as we always do with stocks, and kind of work our way from the top to the bottom of exactly what price levels are going to be significant, and we'll work our way from there really. So what I'm going to do, first we'll start off here at the monthly time frame. Stock prices information goes back to all the way back to 1998 when they were first listed. And since then, you can see they've had a decent rise from when they were first listed at around about the $8 to $10 region. Okay, so, and what we'll do, we'll map out the all-time low. We'll map out the all-time high. And then I'm also going to map out this key level just in there. You can see that it's mapped out as a little bit of a resistance again, and then acted as a base formed of support along that resistance before we've seen the quite meteoric rise since 2011 all the way up till the highs early this year, and then obviously been a sell-off in line with probably the majority of the other stock prices that have been around in the stock market at the moment. So other than that, probably on the monthly, not too much more that I need to kind of look at. I could put in a level there, I guess, but it's not been respected that precisely in most recent trading, so I'm just not going to deal with that at the moment. I'm going to drop down a level first, and I'm going to just map out now the yearly highs and lows, and we'll get to that. And just give me a moment while I do that. I use these vertical tool lines just to kind of give myself a bit of a guideline. That's all it is for. It's nothing analysis wise per se. And it'll just give me a little bit of a guideline that I can just concentrate the highs and lows, and that's all I'm looking for here, just the highs and lows of each price level within these zones. So this obviously dictates the year 2017, and I want to map out the yearly low, the yearly high. Okay, and again, same here, yearly low. Yearly high is going to be very similar to the previous year, so I don't need to put in a new one there, for example, right? Certainly could do, but you can see it has been respected again here. Look, the yearly high, the absolute yearly high has been respected again just there. So what I will do, I'm going to pop that in there, but use then the level here just to draw in a zone for the price. Okay, as a zone instead of it being the two levels individually, because we know that they act as a zone. Need to map out the yearly low here. Okay, and then also the yearly high for this year. This low's already been in, so you can see that's why it's useful to have a zone. So when you see like a little zone like that, you can see the yearly low again's been the yearly high got respected precisely early in February of 2019. But as we move into 2020, the COVID low, as it were, for this stock rebounded exactly off the high for 2017. Okay, so it acted as very much as a zone there that price went into and rebounded off. All right, so pop in the high here for this stock. I'm going to pop it in there. And look at that as well. The high for 2019 acted as a nice level of support exactly for 2021. So it's just so easy. Everybody can conduct this analysis. There's no reason why you can't. So that's where it's quite self-explanatory. I can't really imagine too much more of a simple way that you can analyze a chart from multi-time frame analysis really, really quickly, and just simply as well for it to be so accurate. You're getting real useful information, and that's the key. You want useful information. It's no good just kind of, because there's hundreds of different levels that I could map out on this as I go through, and that's how I get messy charts, is looking at these as like levels that you could trade all individually, and you don't necessarily know which ones are the most important. Well, by adding the time alongside the price, so I'm looking at highs and lows relative to the highs and lows of each year, for example, or each time frame, as you see we go through this, it shows what are the relevant highs and lows for us to trade from. And that's what we want, right? So already there, within just 5 or 6 minutes, I'm able to actually map out now some really key levels that I want to watch for the charts. And already it's given a lot more context to this chart instead of what we were looking at previously, okay, of just like a naked chart and not knowing exactly where things lie, right? So here we go already, starting to kind of come together a little bit more. So I'm going to now drop down from yearly highs. I'm now going to start looking into some quarterly highs and lows. All right, so there we go. Let's do this. Just bear with me while I just do these. How far back shall we go? There's not an exact science to how far to go back. It's entirely up to you, really. But going back a decent amount will always give you more context and certainly more levels to trade from. So that's kind of my advice on that side of things. But there's not an exact science to it, that's for sure. So we'll map out this with a new color, just so it gives us more context and we know what we're looking at as individual colors. What is quite a good way of doing it as well is knowing when you're doing your analysis which color denotes to what time frame, so you can instantly kind of check that and look at that as well. So kind of keeping a consistent color scheme to your charts will help you in your analysis for sure. So here, mapping out the high. Don't need to do the low because that's already in there, okay, as a quarterly low from when we've done our higher time frame for the yearly. So our quarterly high again is already mapped in for this high, and also for the low of this quarter. Zoom in a little bit here, and we can see that's exactly where price is at the moment, okay. So certainly interesting to note that. But also as well, you can see the intra-day low, intra-quarterly low, is in there from when we did our yearly highs and lows. You can see how it bounced off it twice, in fact. So it's just really, really useful information that comes from just doing this really simple analysis. Again, quarterly low, quarterly highs already in. The highs for this quarter and low for this quarter are pretty much in. Not too much there to kind of be excited about. What I will do is just make that a zone. You know what, actually, I'm not going to make that a zone. I'm going to make this a zone in price. So that's more relevant to us. I'm just going to make that the green so we know what it's actually relating to. I can get rid of that. Get rid of that. In fact, I'll put that one back in, so I know what it is. Gives it just a nice little color scheme. The highs again for this quarter are in, the lows are already in. So the highs for this quarter are in there. The lows for this quarter are already in, and the highs are already in there as well. The low looks fairly similar. A high for this quarter already in, lows in. Now what I will do is pop that one in there. Highs printed, lows very close to being printed. And then the high for this quarter is already in there as well. Lows just in around about there as well. And we've got our current quarter that we're trading in now. All right. So that is probably all of the levels that I need to map for this particular chart. Lots of people ask me as well. You know, a few of you have been asking in my messages, in my DMs, whether or not, you know, kind of exactly how to do this process. And as I say, it's not an exact science to it. It doesn't matter necessarily what time frames that you're going down into, but the ones that I stick to, yearly highs and lows are very important. Looking on the high time frame, whether or not that's a monthly or the 3 monthly, whichever one makes logical sense, depending on how much data you've got there, and just mapping out the significant levels that prices moved up to, you know, the all-time highs, all-time lows, some levels that it stopped in between those as well. They shout out to you on a chart. You can see them, and stick to maybe just 2, 3, 4 at the maximum. Just really the massive levels that you can see on those high time frame charts. Just to give some little context to the trading. All right. So that's my answer to that. And exactly how low do you want to go into this analysis? Well, that is entirely up to you, but obviously stick to, again, yearly highs and lows, quarterly highs and lows, financial quarters throughout the year. Then you maybe drop down into weekly highs and lows. If you want to go into a little bit more detail as well, the daily highs and lows, you can drop down to like something on the like for instance on the 5-minute time frame here, for a stock at least here, and you could actually map out weekly highs and lows. You can do daily highs and lows if you drop down even lower look. So it's up to you how precise do you want to be, and it also depends what type of trade are you looking to do. Are you looking to, you know, target the higher price moves, the lower price moves? Lots and lots of things. It's entirely up to you what you want to do. And just by doing the highs and lows, it's the really simple type of thing. There's lots and lots of more detail that we go into as well, for our customers as well. So lots and lots of ways of doing this, but this is a great quick way of showing how to break down a chart and making some quick some quick trading decisions. Right, so let's get into some biases of where we're up to at the moment. Obviously seeing a big sell-off in the price already, and a little bit of a bounce since then. Does that give us any more context? Can we map out, is that a Fibonacci level? Let's have a look. It's not as it stands yet. So we know that there's not been a fulfillment of that Fibonacci level since the sell-off in August to now. So what does that tell me? Well, probably tells me that we've got a little bit more room to the upside, and tells me that there's no reason why it can't bounce higher than where it is at the moment. That's not to say it will turn that it has to, but it's just looking at probabilities. Is there room for it to go higher? Yes, definitely is from initially what we're looking at. Now, can we as well look at some of these levels off of that sell-off and see, do the Fibonacci levels line up precisely with any level from the big sell-off that we're seeing from the year to date, from January all the way up here to the current low? So if that current low did stay in, where would there be the significant bounce up higher? Does this Fibonacci level line up with any of the previous levels that we've mapped out? Well, the good news is it does, and it lines up with quite a significant one as well. The red lines that we're marking there are a really high time frame that we were looking at on the monthlies. So it shows, doesn't it, exactly what we can start mapping in. So the room that we could actually see for a bounce would potentially take us all the way up to the 176 level. So quite a significant room to bounce in there, from here if that low did stay in. And that's then going to be the significant level I'd look out for as a decision point. Will the market turn from there and look to continue its trend? But I'd say that long term, there's certainly an eye on that as long as this low stays in. All right. So They're the kind of things that I'd be looking at. Don't need the Fibonacci level anymore because we've got a few ideas. As I say, the other thing that I did say as well is that if that low stays in as well as a shorter term high or low, then I could see whether or not we're coming into either the 144.8 or maybe stretch up to the 150 region. But I wouldn't want that to close above that Fibonacci. For example, if I saw a wick into that and then a close back below that 38, well, then that would probably determine for me that this had been a nice little retracement, would fulfilled that, and then would be looking at a continuation lower. And you can see exactly, precisely to the dot, couldn't have made that any more perfect, really, that the Fibonacci extension would take us down to the 105 region that we mapped out previously as well on the higher time frame. So certainly got possibility for price to kind of come up to here, react to that level, whether or not it's wicks up into that region, whether or not it doesn't go all the way through and just kind of gets to this green level somewhere within that region. Certainly could well be a very nice trading opportunity, anywhere between the 144 to 150 as a retracement to sell off and continue a trend continuation into the minus 27% level as a Fibonacci extension. Okay, so these type of things add confluences, and that's what we always want to see in trading. When you're making a trading decision, you always want to see confluence. So that's more than one reason of why you maybe want to take a trade. You don't just simply want to take a trade because it's hit one of these key levels. You want to take a trade because it's hit one of these key levels and X reason and Y reason, etc., etc. So the more things that you can add into that, the more likely that you could actually make a profitable trading decision on that. Okay, so my decision point of where things stand right now in this stock, probably not looking into a trade right here and now for myself. It's not financial advice, as I say, at any point. So by all means, take any of this analysis and make your own decisions from that. But I think there's still a little bit more room to the upside. Okay, and whether or not we can see a trend continuation from this region up there, I'd look at what price does when it gets to that level. So if price came up into there anywhere between this 144 and 150 level and rejected that level, then I could get interested in taking a short sell opportunity, targeting down to this 105 level to see a little bit more of a continuation. If that low stays in, for example, if we get back above this level and start building a bit of a base from there, then I think that there's definitely room to take into consideration some buy opportunities, maybe targeting that 176 level. And obviously looking at that as an opportunity as well. So they're the two kind of key levels that I'd be watching right now. Of course, if we break back below, then there's going to be opportunities as well, because it may retest some of these levels as levels of resistance, for example. So it's all about watching what does the price action do once it reaches these levels in particular. All right, so hopefully that's given you a little bit more in-depth analysis into this particular stock, and also a few techniques that you can use in your other analysis that you maybe want to do yourself. And these are all applied to stocks, Forex, crypto, all of this, all of the good stuff. So let us know in the comments below what your thoughts on this in particular stock are. If you've got any individual information about the stock that I don't know, then brilliant. Share it in the comments. It benefits everybody, and that's what it's all about. But other than that, enjoy the rest of your day.